All right, thank you for staying with us. This discussion was even ongoing during the break, and it's still very heated discussion. It's almost 3 against 1. Mheshimiwa says the interest rate cap should stay. The 3 say it should go. But Mheshimiwa, let's come back to that. What's the use of keeping it when there's access to credit is being denied? Nobody's accessing the credit.
First of all,
should we now turn the guns to the bank?
Felix is neutral. So,
yeah.
so the neutral one
three against one.
Balance. It's not 3 against 1. But this is an issue very dear to my heart, because I seem to understand. I can understand Peter and Shiv.
Yeah.
They trade in money. So they cannot talk a different language. They trade in money. That I do understand, and they're allowed. What we cannot allow them is to operate away from the expectations of Article 46 of the Constitution, Section C, which says the consumer has a right to protection by the state, beginning with economic interests.
Yeah.
So where the state is not protecting me against a bank, then somebody is not following the law. You know, like you're saying, there is no access to credit.
Yes.
The reason is not because of the cap. And let me tell Shiv that when you say it's capped at 4%, no. The CBR rate is capped at 9%. So the only thing which the banks called, the courts called yesterday unconstitutional, is the word 4% term. In other words, the banks are allowed to make 13%. And which business do you do that you make 13% profit? Imagine any business under the sun.
Yeah.
The banks are not being truthful. They are allowed by law to make 13%. And if CBR rate were to go up to 10, they would make 14%. So they should be negotiating with central bank based on the economic scenarios in the country.
Yeah.
What are they saying? What is the rate of inflation? How does it affect us? Is it going back to 8%? Or that is the role of central bank, and it is defined in law in the Central Bank Act. Now, you know, there's a lady called Dilma Rousseff. She is a former president of Brazil. She went through this thing. And IMF that you mentioned, IMF does not want us to be different. Otherwise, we have seen thicker road when the Chinese came. The Bretton Woods institutions, we have dealt with them since independence, was there. We had no infrastructure.
Yeah.
I don't like the Chinese very much, but the mere fact that our engagement with them has seen us developing, even around here where your studios here, the mortgage rates are coming down. The cost of buildings are coming down because the Chinese are building all over.
Right.
So they are competing a bad system. We cannot operate as a rule with a bad system. And now this is what I wanted to say.
Mheshimiwa, can I pause you?
Sure.
Because we want to take a caller.
Yeah.
All right, so we have Joshua. Joshua, you're calling in from Muranga. What's your comment or question on the conversation that we're having today in studio?
Yes, good morning.
Good morning.
Allow me to thank Mheshimiwa Midiwo. He has actually nailed it. Number one, I think in this country, anything that is driven by a profit motive should be regulated. Anything, including imports. I think this is where we've gone wrong. Number one, I've not seen any bank making losses after the interest cap rates. Number two, allow me to correct my brother from Titan. Where he is given an array of other alternatives in terms of credit access and all that.
Yes.
But we're talking about the common mwananchi here. The other day I saw a report that was conducted, and it showed that about only 0.7% or so of Kenyans have more than $1 million in their accounts.
Yes, yes.
We're talking about small-scale holders here. Government, again, let me buttress what Mheshimiwa has said, that after the interest cap, the loan intake has gone down.
Yeah.
Let us be true to ourselves. The reason why intake of loans has gone down, even after the interest cap, is because the economy is doing badly. And to surprise you, Trevor, the only sector that is doing well when other industries are collapsing and restructuring and closing down are banks. We cannot allow a rogue industry to control the monetary policy in the country. They have already proven that they cannot control themselves. They are the conduits in money laundering, in corruption in this country.
All right.
Yesterday, we saw the case from at Barclays Bank, Westlands, I think.
All right, Joshua.
I really failed to decipher when the bank manager or whoever it was saying that they didn't know the content of those boxes that were in their bank.
Okay.
What if those were explosives? Let me just tell the government, let's push on capping. Let's even go further and regulate all profit-driven entities in this country. Thank you very much.
Thanks, Joshua. That's Joshua from Mwananchi.
Yes. You know, you need to invite Joshua to your show. Quite an intelligent man. He is just talking what is out there on the streets.
Right. Yeah.
That is what is facing Kenyans. You know, this is not an academic thing. It's not an academic process. This is real, and we have tasked in our constitution the power to protect me and you in our laws.
Yeah.
You know, I was giving you the example of Rosef and this Bretton Woods institutions. She tried to control interest rates. And what IMF threatened economic sanctions, the world. And she said, okay, you are foreign banks, we shall not do it, but we shall go to our own equivalent of KCB and control it. And that all the monies that are banked of government must be their equivalent of KCB. You know, just by that, she beat the world systems. And Brazil took England to become the world's 6th largest economy. And it is working in Brazil. If Brazil can do it, we can do it.
Okay.
What I am saying is this. You know, what I don't agree with Joshua, where he says that that Barclays Bank was culpable in the story yesterday. I think the central bank is culpable by allowing people to take. They can even take a dead human being in that safe. In fact, now that I thought about it, these people that leave evidence, you're safer killing somebody and going to deposit in a bank because it's supposed to be a secret. That secrecy, unearth it for us. Take it out, because we have seen a very bad example of it. Because you can imagine if somebody pours in the economy of Nairobi fake currency of $1 billion bob in one day, this economy will never be there forever. So we have to protect ourselves against that. But now, to finish, there is something going around called Emakiba. The government is mopping funds. And as yesterday I saw, I think, they raised 196 billion.
Over a request of 250 billion.
Yes. This is the way the government should go, because they are looking for 3,000-4,000 shillings from Kenyans. Now, this overnight trading window is the reason why the banks are not lending to you and me. Because why should a bank, which can only make 13%, give you money to pay over a period of time, and they can use the same money, give it to the government, and get profit of 19% overnight? That is the window which is lacking in this whole debate. And that is what nobody will tell you. I want to say lastly that Safaricom, I am of the view that Safaricom should never have been in banking. I have changed my mind. Because the banks are rogue. Safaricom is the reason this economy is surviving. Mama Mboga can access this M-Pesa thing or M-Shwari. It is, I mean, imagine for a minute that in the last 2 years, there was no Safaricom. Would there have been an economy?
All right. Speaking of which, Mheshimiwa, we need to take another caller. This is David from Umoja who is calling in. David, good morning.
David, good morning. All right, you seem to have lost David there. Shiv, you want to come in on this argument by Mheshimiwa? The reason the banking sector is not lending is because they'd rather lend to the people who have a higher interest rate than the common mwananchi. And Joshua there is also saying that your theory doesn't work because less than 300,000 Kenyans have $1 million shillings in their bank account against 40 million Kenyans.
Look, it's a matter of increasing access to credit, generally across the economy. I think the debate, no one is questioning whether or not there's enough credit in the economy. I think everyone's of the opinion here that there is not enough credit circulating in the economy. So the question is then, how do you stimulate it? Do you stimulate it by capping interest rates, which obviously is not working? So isn't there now a time to take a step back and say, interest rate cap is not working. Your common mwananchi, even with the cap, is not able to get credit. Yes. There was an interesting technology report that we moved 4 trillion shillings out of an 8 trillion shilling GDP on our phones last year. Safaricom has now come in with Fuliza. So there's innovative ways in which people are accessing credit. Felix is completely right. It's not only about pricing, it's about accessibility. Sometimes people prefer accessibility to pricing. They're happy to pay a little bit more for a more efficient service. So interest rate caps, in our opinion, is not the right way to increase access to credit.
Right.
You need to create an environment where there is open and transparent interest rates. You need to create an environment where people have alternatives. And you need to create an environment where government is really creating a conducive environment for people to borrow and people to invest.
And talking about government creating a conducive environment, just to pick from what Joshua the caller had said, it was 99.3 accounts in Kenya have less than 1 million. This is, of course, when the CBK Governor Njoroge appeared before Parliament during the grilling. But this is also what he said. Even as the economy is growing at about 6.1% in 2018, we need to keep SMEs at the top of our minds. Tourism, manufacturing and agriculture showed good performance in 2018. Just drawing from those two aspects, as an investment banker, what do you think would happen if SMEs came together? The same way bankers have an association. If SMEs came together and said, listen, we're going to go with the most favorable bank, we're going to go with the most favorable SACCO, would that empower Kenyans?
Yeah, because at the end of the day, it's more information that's available. But the question is, who is the most favorable? And at which terms are they going to lend you at? When a bank does their risk pricing framework, they might realize, hang on a minute, I can't lend you within the limits that are set by the central bank rate, +4. Monetary policy starts to become ineffective because any change you make on your monetary policy for your central bank rate then starts to affect the pricing of loans within an economy. So yeah, if SMEs came together, if the public had access to information, if the public had access to where they can easily access at the most favorable terms the credit that's available in the economy, you would automatically see interest rates starting to come down.
Right.
Interesting. There's a text from Johnson Sakaja. I'm sure you've also received it. That's a senator from Nairobi. He says interest rate cap is not working because the common businessman is being crowded out by GOK borrowing. That's the government of Kenya borrowing. It works in many countries where the government isn't competing with the SMEs for credit from the domestic market. Do you agree with that? That's from Johnson Sakaja. He's the senator from Nairobi. He says the issue here is that the government of Kenya is competing with the SMEs. That's the reason why this is not working, but it works in many other countries.
I totally agree with the Honorable Sakaja, because a bank would prefer to lend to government than the common mwananchi, because it's more secure and there is guaranteed, and also the interest rate is high, their profit margin are higher. So going back to the interest rate cap, what we should be saying, or what we should be talking about, it's about banks are not ready because of they want to give secured loans. So my take on this is that government or other institution should come up with a way that they can help the common mwananchi to have collateral, because banks are not risk takers. They don't want to lend you, to give you money without collateral. So they won't take that risk. So how can we solve that? It's by providing collateral to these people who want to borrow. And when we provide collateral, banks will be willing to lend. And when banks are willing to lend, there will be access to credit. And the common mwananchi will be able to have disposable income, money that he or she can invest elsewhere.
Felix, your views on this very briefly?
I will consolidate what the three panelists have said. I'm happy that we're on the same page with Mheshimiwa, saying that if it is not for technology, if it is not for technology driven by firms like Safaricom, we would be having a very harder time in terms of an economy. Now, I want to bring in what Shiva said. Now, the challenge and what Honorable Sakaja has said is that the government is becoming a better suitor for the banks as opposed to the common mwananchi. Now, the government is supposed to be on the side of the common mwananchi.
But it's not the case with Kenya.
There is no way you can have in traditional relationship in the African context, you cannot have two sisters competing for the same suitor. You will understand what will happen is that, of course, one will deny the other one, the younger sister or the older sister, and that kind of thing. So basically, what is supposed to be happening in such a situation is the sisters should, whoever is the first one, the other one should support. And if government is for the people, for its own people, it should not be competing for the same resources with its own people. So what the government should do is move to technology like what Mheshimiwa said. Go to a Makiba, raise your money from there. But if you have to raise your money from overnight lending from the banks, what will happen is the common mwananchi will not have access to money because you are taking the money.
Or borrow at the same rate as the common mwananchi.
If they borrow from the same rate, Shiv's angle comes to point. It is less risk to lend to the government as opposed to the mama mboga, because even looking for mama mboga is a hassle.
Felix, the way you've painted a fantastic image of how easy it is for mama mboga to access a mobile loan compared to walking into a bank, signing all those forms.
Yes.
At this rate, we might as well give our blood donations.
Yes, everything.
But the whole point is the fact that we're able to access money that quick, that shows how desperate Kenyans are in this economy.
The Kenyans are desperate, yes. But then at the same time, the Kenyans are tired of an old way of doing things. Basically, what businesses need to do, not just banks, all businesses, everybody wants something that they can access quick and fast. Nowadays, we have the same Kenyans actually drove down one of the biggest retailers because they can go and shop either at another retail shop or the retailer cannot actually do its business online. And we have actually the Kenya National Bureau of Statistics saying that a third of the money or the commerce that was done last year was done online or via mobile. So basically businesses need to move to technology. They need to use technology so that they can drive their agenda. And that is the access that the common mwananchi, the mama mboga, and everybody actually needs. And that is what they are looking for. They're not looking at whether you're more expensive than the other person. They're just looking for the fact that they can actually access what they want from